Hello and welcome everyone. So in this video I would like to discuss about statutory audit. We have already discussed about internal audit and its definition and scope, and now statutory audit. See, statutory audit is the checking of accounts as required by law. A statute or law may require having an annual audit of financial record of a company or any other entity. The law may require the audit to be conducted in the specified manner, the manner of reporting, and the authority to which the report of auditors should be presented are all specified by the statute. Statutory audit are mandatory in nature. The statutory auditor is generally the principal auditor in an organization. Let's write. Audit is the checking of accounts as required by law. Most important point, statutory audit is checking of accounts as required by law. Okay. Statutory audit are generally mandatory in nature. Okay. And the statutory auditor is generally the principal auditor in an organization. Auditor is generally the principal auditor in an organization. Okay. As per Companies Act 2013. Statutory audit is the checking of accounts as required by law. Statutory audit are generally mandatory in nature. The statutory auditor is generally the principal auditor in an organization as per Companies Act 2013. Okay. In case of companies, the Companies Act 2013 governs the audit of accounts, its reporting and manner of preparing the audit report. So, in case of companies, according to Companies Act, in case of companies, The Company Year 2013 governs the audit, govern the audit of accounts, its reporting, and manner of preparing the audit report. Clear? In case of companies, the Company Act 2013 governs the audit of accounts, its reporting, and manner of preparing the audit report. But in case of government companies, or government body, audit of government body, the scope and audit programs are set by the Comptroller and Auditor General of India. Comptroller and Auditor General of India, and the Companies Act 2013. In case of audit of government bodies, the scope and audit programs are set by the Comptroller and Auditor General of India and the Company Act 2013. But in case of audit of insurance company or a nationalized bank, the audit is governed by specific statutes and IRDAI or RBI. Means in case of IRDAI, Insurance Regulatory and Development Authority of India, and in case of RBI, Reserve Bank of India guidelines. And in case of cooperative banks, also governed by the Cooperative Society Act 1912. The statutory auditor of a company is appointed by the board, shareholder in the general meeting, and shareholder cannot delegate this power to director even by passing a special resolution. Okay, this point is very important, that the statutory auditor of a company is appointed by board or shareholders in the general meeting and shareholders cannot delegates this power to director. To directors even by passing a special resolution. Means statutory auditor, which is appointed by shareholder, cannot be changed to director even if by passing a special resolution, and shareholder cannot delegate this power to director even if passing a special resolution in that case. So this is very important. Statutory auditor can be appointed by the central government if shareholder fail to appoint an auditor. A statutory audit should be performed by a qualified chartered accountant holding a valid certificate of practice and not by any other person. Remember, statutory audit should be performed by a qualified chartered accountant. Statutory audit should be performed by a qualified chartered accountant holding a valid certificate of practice. This is called COP. COP, certificate of practice, and not by any other person, and not by any other person. That means even if you are cost accountant or company secretaries, you can do statutory audit. As per the company Act 2013, only statutory audit should be performed by a qualified chartered accountant with valid certificate of practice. Okay. So now, what are the advantages of statutory audit? Advantages of statutory audit. Okay. So, what are the advantages of statutory audit? The auditor expresses his independent opinion after knowing or following relevant audit procedures and checking the external and internal evidence necessary for the conduct of audit. He comments on the truthfulness and fairness of statement of affairs of the organization as on certain date, and also about the fact that no misstatement or misrepresentation has been made in the financial statement under report. Such an independent opinion by the auditor increases the reliability, authenticity of the financial statement, which may further be used by different users for various purposes, such as first one, the member shareholders, stakeholders, for their economic decision, for their economic decisions and for exercising their voting rights. The first most essential advantages of statutory audit: the members, shareholders, stakeholders are for their economic decision and for the exercising their voting rights. They need statutory audit. Again, for timely tax assessment. For timely tax assessment, statutory audit is very essential. For determining the purchase or sale consideration in case of ongoing concern. For determining the purchase or sale consideration. The purchase or sale consideration in case of ongoing concern. In case of ongoing concern. Next, for getting financial assistance. From financial institution, banks or investors. Banks or investors, there is requirement of statutory audit for getting financial assistance from financial institutions